Thank you. Good morning. Just checking. The one strategy he didn't put up there is really for us to convince UVA that they have too many donors and they need to give some of those to us. Is that good, Colette? Can we do that? Okay. I'll be very quick, and I'm going to give you kind of a sense of what VCU is for those of you who have not been to Richmond, and then turn it over to Dave to give you some of the data. We are an institution that has grown rapidly over the last 15 years. In fact, we have absorbed over 20% of the enrollment growth in the Commonwealth of Virginia over the past 15 years. We have not seen the dollar for dollar increase in state appropriations, as shocking as that may be to people. This says over 31,000 students. We actually have over 32,000 students now, and we have what I would call a bifurcated campus. Much of our campus was built in the 1800s, so late 1800s. I work in a building that still has window air conditioners because we can't really easily create a different kind of HVAC system in a building like that. And then we have the majority of our growth at VCU, the majority of our capital building has occurred within the last 10 years. So if you look on square footage basis, over half of it has been built in the last 10 to 15 years. So we have this real bifurcated campus where I have deferred maintenance of about $300 million. Much of it is because we have this, these buildings that are beautiful and historic, but they're really expensive to operate. And then we also, we're constrained in Richmond because we sit in the middle of 4 historic neighborhoods, and we have agreements with those neighborhoods that we will not build into them, so we are landlocked in the city. That provides us with certain kinds of challenges that other campuses may not have to endure. And David, if you could flip to the next one. This shows you our growth in capital infrastructure, but it also shows you our growth in enrollment. So even though we've been adding buildings, the growth of enrollment has been outpacing our square footage over the past 15 years, which creates, again, an interesting challenge and opportunity for someone in the CFO seat. Fortunately, I've given that over to my colleague who's in the room, and she gets nervous when I speak in public because I tend to spend money that I don't have. But with that, David, I'll turn it over to talk about some of the sightlines data. And I will say, how many folks in the room do not use sightlines? I'm not a vendor advocate, and I'm not on their payroll, but I will say that the data that they provide is exceptionally helpful with our board. To be able to have data-heavy argument and dialogue with our board to show them where we fall in terms of our peers and making them understand that our infrastructure is our selling point to new students has been very, very helpful over the last 2 years since I've been at the institution.
Thank you, David. That's very kind of you. One of the fascinating things, as David mentioned, is the bifurcation or the barbelling of their campus. Some very old facilities and some very new facilities. They've actually driven down their average age in the last 7 or 8 years, and it's started to creep back up. So the average age of their facilities is about 46 or 47 years old back in the early 2000s. Today it's about 45. It had dropped. The interesting thing is compared to the peers, and when we're talking peers, we're talking enrollment peers as well as competitive peers, the average age is about 30. So that 15-year delta is massive. I mean, when you think about it on a percentage basis and just the kind of capital requirements that are out there and the challenges that presents. What we saw in addition here is, again, just pointing out to the right, this is VCU's capital spend profile, the dark blue being their one-time money, the light blue being, the dark blue being the recurring annual budget money, the light blue being the one-time money. You can see how it's dropped dramatically since 2008 in total, but in particular, the state reserve spendings have dropped almost in half. And this is different than we're seeing in terms of major national trends across the country, but in this case, that's really forced the campus to rethink how they start spending their resources and where they focused the dollars. No surprise, their backlog has jumped dramatically in the last 5 years. And well outpaces their peer profile. So when you look at it, what has happened? Well, between the last, basically last decade, because this is more, even though this has not been a reaction to the recession, but it's been a reaction to a longer-term issue of age of facilities, there's been a shift where almost half of the capital resources have been put into their core mechanical systems in order to lower energy, lower operating costs, and release monies that can actually build and restore other kinds of maintenance on their campus. Very interesting profile in how they've moved to that point. And from our perspective of working with them, there's been a tremendous amount, there needed to be a tremendous amount of communication to all the academics and the department heads about what are the projects and why are they doing them, and how are those projects really core critical to their mission. At the same time, their operating budgets have been historically low, but have been cut even further. And they just had to make conscious decisions to lower the cost of operations, and they had cuts across the board in routine maintenance and custodial. But it was interesting because they made those cuts not by just saying everybody gets less. They've actually focused and increased the kind of quality in certain areas of the campus. So in terms of enrollment and recruitment and retention areas and key program areas, the actual maintenance levels and the general scoring of their systems has actually improved. Other areas of the campus, they've made conscious decisions and communicated to the customers that these are areas that we're going to reduce. This is a classic example of not all buildings are created equal. And so they've made a very straightforward policy decision that says we're going to focus resources in certain buildings and we're going to drive that to support program, and other buildings are less important and we're going to use that to reduce our costs. So I thought that was a very fascinating concept. So during that cuts in time, actually their overall inspection scores are up over 8% in terms of stronger cleanliness, improved grounds, and lower, the mechanical scores have also been strong. Not surprisingly, some of the general satisfaction scores, because we do a survey, have fallen. Those customers that have been told their scores are going to go down actually said, yeah, well, we're not happy about it. But the communication scores have actually increased. When we actually tested, did they know and did they understand what was happening, the answer was yes. So that kind of transparency, I think, was a significant issue here. So I'm going to turn it back. So that's kind of the core data.
And I'm happy to talk about any of these in more detail, but the 5 strategies that were outlined by my colleague are actually, we're chipping away at all 5 of those. The 6th one, of course, is basketball. We really need our basketball team to do well next year. So for those who don't have season tickets, I have a few in my pocket. I'll focus really on the second bullet point, which has been a shift in philosophy for VCU as a public institution that's been sort of very focused on the standard way of building buildings. We have really, with board support, moved into a very different realm of doing public-private partnerships, and we're actually engaged actively in 2 of them. And the data point that most CFOs resonate with is cost per square foot. So we're building a building right now that'll be multi-use. It'll be academic, administrative, and retail. We had to depurpose a building. We had to destroy one, take it down on campus. That's not an easy thing to do always. But we'll be able to build that building at $184 a square foot versus the $300 a square foot we would have had to spend if we had done it through the state system. And it's been a very interesting activity with a lot of lawyers to get that land into our real estate foundation, build the building with private developers, and then over a course of a leaseback period, we will get that land and the building back at the end of the lease term. All very legal, and I'm happy to walk folks through it, but that's an example of a board. I have a board now that's very corporate in its makeup, and their willingness to entertain projects like this that might not have been attractive in years past shows a very different shift in governance. And because of the lower cost to build this building, the debt service on it, or the lease payment, however you want to look at it, will be significantly less, so that I can preserve that capacity for additional academic buildings. We've also just implemented a master plan, board approved, that has a $2 billion price tag. So that price tag gets my board very interested in options, and I think that's, with the help of Sightlines, using all of this data has created kind of a burning platform to be able to explain to the board that we're not going to get the 15 buildings we need over the next decade unless we think very differently about how we're going to construct the buildings we have today. With that, I'll stop, and I'm happy to answer questions or just turn it over to my colleagues.